think you just have to look from a point of view of an investor standpoint. You need to look at each project individually and say, okay, if I'm putting money into this, what's the technical team look like? How far advanced are they? How good is that deposit in terms of the quality of the actual resource in the ground? And how likely is it that they'll be able to develop this to a battery grade product?
My next guest is Adam Panayi. He's the managing director of Rho Motion. Adam, welcome.
Thank you for having me.
You bet. Adam, what is the business of Rho Motion?
So we're a research and consultancy house based in London, and our focus is on the downstream of the lithium-ion battery industry and associated technologies. So we also look at charging, some infrastructure work as well.
Okay, there's obviously a growing interest in the entire space. The price of lithium in particular has, soared 5 times since the beginning of 2022 even. Is this a sustainable trend, and if so, what's driving it?
So there's been, in terms of investment in the lithium space and consequent changes in prices, there's been a couple of cycles here. What happened was in around 2017, 2018, there was a significant amount of investment in the business. A significant amount of new capacity came online, and that didn't correspond with a major uptick in EV demand at the time. So prices then went down. That put the brakes on a lot of lithium mining investment in that period. And now we're in a situation where EV demand has gone through the roof, and the suppliers have been there to keep up. So the consequence is the price rises that you've talked about. That's starting to already put pressure on battery raw material or battery costs to the OEM, and to some extent that's feeding through to vehicle prices as well. So to your question, is that sustainable? Well, now you have prices at such a high level, they're well above the cost of production. There are significant margins to be made for juniors and for the existing players in that space. You'd expect to see a lot of supplies come on in the coming years. That's of course limited by the quality of the resources available, and also importantly for lithium, but also for other battery materials as well, they have to be battery grade. And that's a chemical process for the most part in a conversion to lithium carbonate and lithium hydroxide. That's really where you tend to get the sticking point as well. So there isn't an instant supply response in the way that you might get with some other materials, but there will be a supply response. So you'd expect that over time, some of these price pressures would ease.
Mm-hmm. So are the OEMs paying what the quoted commodity price of lithium is at $80,000 roughly per ton for lithium carbonate, or is that relationship different?
Yeah, the relationship is somewhat different because the prices that are quoted, and especially the ones that are really at the top end, they tend to be spot prices. OEMs, who are in this market in a major way are buying on contract, but that upward trend on the spot price does then reflect in the contract price at a delay, and probably not to the same extent of growth because the OEM has somewhat more power in the market than a spot buyer. But yeah, so they're not paying at the top of what you see quoted for the spot prices, but they do feel the pressure of these price rises over time.
Right. And so it's the price for lithium hydroxide versus lithium carbonate. I mean, they seem to be leapfrogging each other a bit here. What is the difference between hydroxide and carbonate in the battery making process, and why are they leapfrogging in price over time?
Yeah, so it was always the case that the hydroxide traded at a premium to carbonate for most of the last 5 or 6 years. And that flipped actually this year. Carbonate started to trade at a premium to hydroxide for a while. So just the basics of this are that most carbonate is produced out of brine resources, so out of the Atacama for the most part, and most hydroxide comes from hard rock resources, Western Australia and other places. Now that's quite a crude categorization, but it's good enough to understand this market to some extent. Carbonate again tends to go into LFP, and hydroxide will tend to go into NCM-based materials, NMC, you might also hear described as. There are reasons for that. Hydroxide tends to degrade at a lower temperature, so it's actually slightly more cost-effective to use it in NCM or NMC cathodes. Whereas the LFP has always used the carbonate route for similar reasons as well. It's just more cost effective to go down that route for them. So one of the drivers of the yo-yoing of the two premiums at the moment, and as I said previously, hydroxide was always at a premium previously. One, that more hydroxide capacity has come online, because there's just been investment in that because of the hard rock resources in Australia getting shipped over to China for processing. And two, there has been more LFP demand this year and last year, in fact, as well. So that's pushed up demand for carbonate.
Sure. And is LFP chemistry in batteries sort of the trend for the future? Will that sort of diverge more? The NCM batteries will become less common and the LFP batteries will become more prevalent in automotive applications?
If you'd asked that question, say, 3 years ago, the answer would have been very much that NCM is in the ascendant and LFP was dropping off somewhat. There's been significant technological development in LFP, not necessarily at the cell level, although there has been some, but at the system level. LFP is a lot more stable, needs much less thermal management. And so at the system level, so at the vehicle level, automakers and their cell manufacturers have been able to skip the module stage. So normally it will go cell, module, pack. CATL, BYD, they've skipped the module stage, gone cell to pack. You might have heard that in the last couple of years. That, because you're driving down the weight of the overall system, the energy density of that LFP has gone up. So it's still nowhere near NCM, but it has improved. Now you're starting to see progress towards cell to body. So again, you're stripping out the pack level, and again, that will bring up the energy density on a gravimetric basis for LFP. But again, it will still be below NCM. Now, the NCM piece is, like I said, it was in the ascendant several years ago. In the Western world, it's still the technology of choice. Tesla use NCA, which is effectively an NCM type technology. Most of the European manufacturers are using NCM cells in their current offerings. But the Chinese have started to move over to LFP in a major way. And one of the things that's caught people's attention in the last couple of years is that the Shanghai Gigafactory has moved over quite heavily to LFP. So for the standard raised tests now, they're using LFP. Now, in China, that's quite a bit of this demand, but in the rest of the world, that's not really. So at the moment, LFP is probably about a third of the market globally. In China, it's probably just over 50% of the market. And various iterations of the NCM technology make up the rest. Over time, you will see more LFP come through in the Western world. VW have talked about using it. It will be mainly for smaller models because, again, the energy density is lower. If you have premium models that need to go long distances and tend to be heavier vehicles, that's going to be NCM. So the short answer, after all of that, is that if you're looking at high mileage premium vehicles, they're going to tend to be NCM. If you're looking at lower mileage, more market entry level vehicles, they will tend to be LFP.
Mm-hmm. Okay, so in the grand scheme of things, the premium between hydroxide and carbonate is not really relevant from an investment perspective. They will continue to, challenge each other, and different developments will cause different price fluctuations. So now, in the whole global matrix and availability of lithium, I recently saw the slide, and I don't know if it's still current, that 52% of the world's lithium comes from hard rock, primarily from Australia, and 38% comes from South America from brine sources, and the rest is sort of all over the world from a mixture of both. Is there an expectation that brine sources will become a bigger portion of the global supply side? And if so, what needs to happen for that to happen?
I mean, there are multiple brine resources around that sort of golden triangle area of the northern Chile and into Argentina and so on, even potentially Bolivia as well, where there is the potential for new brine capacity to come online. But that's probably equally true of hard rock as well. It gets somewhat out of my area of expertise because we're much more on that downstream. But from the conversations I've had is that the issue with some of the brine deposits is that the chemical processing stage adds a degree of complexity that you don't necessarily have with the hard rock, because the hard rock tends to just get processed somewhere else, whereas with the brine deposits, it tends to get processed to carbonate at or near site. So that adds a degree of complexity, and you've seen it over the last couple of years with some of those major players, and I won't go into too many details here, but where they've been trying to develop their brownfield sites to just expand them, been met with multiple delays and so on over time. So because of the chemical processing piece. The extraction is not that difficult. You've got obviously the issue with water, but the overall technology is actually quite cheap and it is relatively straightforward. But then the processing to the carbonate makes it trickier. So, you know, I'm treading a fairly fine line here, because people on both sides of that debate, if they're developing a brine project, they'll probably say, oh, no, you know, we can move forward quite quickly. And if you're developing a hard rock project, they'll probably say they can move those forward quite quickly. And I think you just have to look from a point of view of an investor standpoint. You need to look at each project individually and say, okay, if I'm putting money into this, what's the technical team look like? How far advanced are they? How good is that deposit in terms of the quality of the actual resource in the ground? And you know, how likely is it that they'll be able to develop this to a battery grade product? Because that's really why they're doing it. That's why any project is getting off the ground. So yeah, you can speak in some sort of generalities, but I think if you're really putting money into this, you need to look at each project individually.
Sure. So your company provides actionable intelligence on the EV battery and charging space. What kind of customers come to you for this intelligence?
Yeah, so we actually are fortunate enough to run the entire length of the supply chain. So in terms of our client base, there's a significant portion of that is on the commodity side, on the resource extraction side, so miners and so on, and on the chemical processing side as well. We also have clients that are in the cathode and precursor piece of the market, and on the anode side, cell manufacturers, OEMs, and also then going into the grid and charging piece as well. So the fortunate thing about that is, because we have a policy of active engagement with our clients, we speak to them as often as possible. You get to hear a range of viewpoints along that piece, and it's not very likely that a miner is going to know what's happening in the charging space particularly, or be able to really comprehend that. So what we're able to do is sit somewhere in the middle there and take on all those viewpoints and try and come up with a balanced view on the market.
Interesting. Okay, Adam, I really appreciate your input today. Thank you for your time. We'll leave it there, and I'll come back to you in the future and get an update. Thanks for joining us today.
Thank you very much for having me.